Our next guest is one of the largest lending partners to Fannie Mae and Freddie Mac, these so-called GSEs, with the Trump administration discussing privatizing these two mortgage giants. What would the impact be on the housing sector? Joining us is Willie Walker, Chairman and CEO of Walker & Dunlop. Always good to have you here, Willie.
Nice to be here, David.
Let's start off on this because we've talked about it towards the end of interviews, but I'd like to get a little more time. And obviously, given your relationship with Walker & Dunlop, the Trump administration last time tried but never quite got to the privatization of these two entities that have been in conservatorship since really the financial crisis. So we're talking 08, 09.
Yep.
What are your expectations here, and what would be the impact if, in fact, they are privatized?
So the president, David, talked prior to being elected the second time about privatizing Fannie and Freddie. Treasury Secretary Bessent on your show has talked about the potential privatization of Fannie and Freddie. And we have a new regulator at FHFA in Bill Pulte, who seems to be focused on this issue, has not made public comments other than in his confirmation hearings, where he was very focused on the safety and soundness of Fannie and Freddie and the safety and soundness of the U.S. mortgage market. But I would expect that under the leadership of Director Pulte, both Fannie and Freddie continue to aggregate capital to make it so they've got a capital base that allows them to potentially go private, and that they consider spinning them back out of conservatorship and making them private, publicly traded companies once again.
Right. Going private actually means going public.
Correct. Exactly.
And raising additional capital. What do you think the impact would be for, so many people who, at least if they're borrowing less than, $800,000 on a loan, are probably dealing with Fannie and Freddie in some way? Will rates go higher?
So there are a lot of people who've sort of been saying spreads are going to gap out if Fannie and Freddie get spun back out. And I think at the core of all that is the guarantee, the government guarantee, which right now is an implicit government guarantee. It's not an explicit government guarantee. And one of the things I think people forget is that Fannie and Freddie have never, ever, since they were both founded, had an explicit guarantee. So my thinking is that if they got spun with an implicit guarantee, with the same type of scaffolding they have around them with credit lines from the U.S. Treasury and things of that nature, that you wouldn't see a material change in the pricing of the bonds that Fannie and Freddie issue, and therefore in the cost of borrowing to the U.S. consumer. There are plenty of people who would take the other side of that and say, hey, if they get spun without exactly the guarantee that they have in place today, which is in conservatorship, prices will gap out and the cost of borrowing to the U.S. consumer will go up. I disagree.
Yeah. They've been contributing a nice little chunk of money to the budget for a long time now, too, haven't they?
They have. And, they cost the U.S. government $190 billion to bail them out.
Right,
they got the 190 back. They've earned over another $100 billion on top of that. The interesting thing about it, David, is that you talk to people at the CBO, quite honestly, $100 billion today, it's a drop in the bucket. They're talking about trillions of dollars. The Commerce Secretary is talking about raising $1 trillion through tariffs and other ways. That's the kind of money they're talking about, not a couple $100 billion here.
Yeah, although I could figure out a lot of things to do with $100 billion that would be
yes, as could
I. I wonder, having followed them obviously very closely in terms of the roots of the financial crisis itself, when Fannie and Freddie kind of went off the rails following so many of the other mortgage brokerages into really unsafe and unsound lending practices, that didn't help us. Do you think they will start to take on more risk again as public companies?
So the real question there is their return on equity, and whether you get to a return on equity that investors really want to buy into. And both of them are in high single digits today. And so I think there are two ways to do that. A, to allow them to grow their businesses, which means they do more lending, they expand their footprint in multifamily lending and things of that nature. Or the other is to allow them to take more risk. My sense, David, is that the American public, as well as people on Capitol Hill, do not want to see Fannie and Freddie taking more risk. They've done an amazing job of taking that risk and laying it off to private investors like us. And so I would think on the risk side, they stay pretty much in the same box that they're in. But as it relates to their ability to lend more in the economy, you mentioned $800,000 as far as a conforming loan. They might raise the conforming loan limits. They might, as I said, allow them to do more in the multifamily space. Those are ways for them to grow their top and bottom line.